Okay, guys, let's see. Here we are. It's early afternoon on the 30th. We're going to finish up with a look at the S&P, and then we'll. I've got an SPY trade here that you might consider as we go into the election next week and some of the volatility that, as I've mentioned, I am very much convinced is coming our way. So now we'll get here in a second. Now, before we do here, just for those of you that perhaps didn't see this in the Bitcoin video, I've got to mention these. So this is Halloween promotion that we've got running through the 31st. So we'll run this through midnight of the 31st. If any of you are kind of on the fence here, as I said previously, 31%, that's as low as we ever go or have ever gone. We've gone to 30%, but never 31 on the educational membership. Right, it's educational membership only, right? For those of you interested in the Elliott training and the belt system, and what essentially gets you access to everything that we do. So that's available to you. And then as well, for those of you that are interested in the work that we do in NinjaTrader with all the custom tools that we've designed over the last year and a half, I think we're up to now. We're up to about 25 indicators, and I think the tool suite that we just put through, it'll be up, the training videos will be up over the weekend. I think it's the best work we've ever done. It's really, wow, the results are phenomenal. So if you're interested in that, that's a way to participate there, save a little dough, but this is the big one here on the educational membership. So just so you know that is underway. Oh shit, now I gotta find my chart. There we go. Okay, with that said, let's look here at the S&P. Now this is a bit of a follow-up here for those of you, let's see, when I put, it was last Sunday here where I said, hey, this is looking quite bearish, and as I've expressed my view a number of times, I do think we're at a 99.9% probability of a contested election, and there's no political bias there. What I'm saying is, doesn't matter who's declaring themselves the winner, the other side's going to contest it. Right? There's just too much. Well, these are politicians. Now all of the potential confusion that's been sown around mail-in, absentee, all of it, right? It's a clusterfuck of the highest order, and we are headed, in my mind, as far as I'm concerned, we're headed to the Supreme Court. That's where I think this election is going to be decided. I would love to be wildly wrong. I really would, but that's not how I'm going to trade the next 2 weeks. So as we sit here, this is looking more and more bearish for the S&P and the broader index. Now there's a lot of reasons behind this, but we're just going to focus on the TA. I have to catch myself. I often find myself wanting to say TNA, which would probably offend any female viewers that we have. But my broader point here is that we can get to a completed impulse. Granted, it gets a little sloppy in here, but the 5 up, gave us our new all-time high. Now at this point, with the swing down here and then the retrace here being a lower high, and now this starting to accelerate. Well, there's a couple of different ways to count this. Now, one more bearish than the other. So you certainly, well, yeah, that's going to maybe be hard to see. Let me go to a 2-hour. You can see this a little bit better. All right, so coming down here, there's a solid case here for an ABC into the low. So if I draw this here, so this is hard to argue with that. That is an ABC. We end with a nice diagonal here, gets us down to this pivot. Now, again, this looks like an ABC here. It was questionable. That's why there was a little hesitation on this trade until we broke this trend line here, because there was the possibility here that we could have done this and then gone again. But with this now, with the break here, I think the intermediate high, well, my view is the intermediate top is in. So right now, with 2 ways we could look at this. We could consider this a flat, which would be less bearish. So if it's a flat, we're doing this, right? So we could have a 3, 3, 5, right? Which would put us down here. But that would put us down here. I've got a target down here, 3068, 3040, anywhere in this range here. And I'm doing that a couple of different ways. So swing of this length of this pivot from this pivot right here. So in a corrective context, if it's not going to be the 100, and it looks like we're headed towards that median line, but if that were the case, if we're going to bang this here for our, God damn it. Most annoying feature of TradingView, never one click. All right, so if we're going to come down here and get that pivot, well, that kind of sets up the move down here, right? So you can see the impulse ending this. Well, let's not get ahead of ourselves, but So that would be, let's see, let me go back to a 4 here, and we look at that in the context of a full correction off of the entire rally off the COVID low. Okay, so if we pull this up, all right, so now we go to that top. Well, that's going to put us right here at the 38. So, you know, that would be unusually shallow considering the range we just traveled here. For us to put in if this is going to be a 1-2 at the 38, you know, of course, not like we've never seen that before. It's just unusual, right? It's lower odds. But now think about the alternate here. So if this is going to finish as 4-5, right, we'd have a flat. This is 887. Come on, Elliott purists, right? You're going to bicker over the 887 to 90%. That's far enough in my view. So if we're going to come down here and get a pivot here, you could make a case that the ABC, that we had the flat, and we get the pivot here at the 38, the median line, and now perhaps, you know, so we get through the election results. Oh, you know, depending on when we ultimately get a decision, and then what's after that, right? Again, it doesn't matter who wins. As far as I'm concerned, as I've said before, stimulus is just a matter of when, not a matter of if. It's going to come. How big, how much, how soon, those are the variables, but it's coming. So stimulus massively, and I mean massively bullish to the market, right? We're going to get another, pick your trillion or trillions. It doesn't matter. Some massive stimulus is coming. Now, if the market continues to sell off, right, the bigger the stimulus is going to be. So I am not expecting a retest of these lows. I'm not. Is it possible? Fuck, of course. Consider the alternate here. If this is a WXY and this impulse is going down as our A, well, going to start to look a lot more ominous here for bulls if we were to come down that line. That's still, right? And then we'd have still a more typical retracement level for a wave 2. Still wouldn't kill the bull, but you know, that would be one hell of a trade to catch that. Right now, I don't want to trade off of that just yet. There's too much information still yet to be revealed here. So right now, I'm trading for the target that we might have a little retrace here. Oh shit, we're going to get it Monday, Tuesday. My guess is the market is very nervous Monday, Tuesday, but then ultimately there's another leg down here to get us to this. So in terms of constructing the trade, I'm going with the more conservative of the two. If we get down here, this trade would be nicely profitable, and we do this. Right, well then I'd reload for another push down to complete the WXY of the X, because after that we'd be looking for 3. We'd be looking for a zigzag, right? So that would get us there. So that's how I'm viewing this. Now let's put a trade together. Right now, as let's see if we can go down to the hourly. I think we'll get this. So if we look here, coming off the pivot here, and just to reiterate here, so why I'm calling this a flat, I go here. Oh, what do I got here? I got to get, I'm taking to calling these platinum. Okay, so here's the 887 and the 90 right there. We're a couple of ticks off of that. So swing up here, 707, 764, 786, 887, 90. I mean, we're within, you know, we're tagging the 887. We didn't quite get 90, but I'd call that a flat myself. So now coming down, looks like it's, right, 1, 2, we're in the 3. Right, we could get this could keep going. We get the 100 here and get our median line, because as I've said many times, right, it doesn't matter that we went past the golden zone here. I've got a corner, so I've got a corner pocket. The 80% is still intact. I've got 80% probability I'm going to get here. I wouldn't bet against that. I wouldn't trade against us getting to the perfect 100 here and getting to the median line. Right, that's you know, 3162, but I actually think that's a candidate for the 4. So the bigger target is down here at 3040, 3050 in that range. So put that in the SPY numbers. So our target's going to be 305. So putting that together in the SPY, so I ran through the option model with the premise that we're looking for a 5. Well, let me get the stuff so you can see it here. So my anticipation is that let's see, get this. So here's our, looks like I got to update the data. But so we're running at about, well, let's see, what's our implied volatility right now? Implied volatility is running, let's get it over here, but in the mid-20s. Okay, so we're running in the mid-20s. my expectation on this trade is that we're going to increase, that the volatility is going to increase. The implied volatility, the option volatility is going to increase, and I think a reasonable target would be go back to something like that, where we were up in the mid threes. So just a 5% increase. So I'm actually being more conservative. I'm assuming that we don't get to that level of volatility. The implied volatility does not go back to this level we reached in June, but we're just going to get another 5 percentage points higher. If what I think is going to happen happens, 5% is going to be the warm up. I think there's potential for it to get, you know, as high as we went. Well, maybe not the COVID low, but we're certainly to get up in the 40-50% of the implied volatility. So this trade would benefit from that. So the trade that I think makes the most sense here, if you're not in one yet, and the trade that we proposed last week is already in a nice profit, so you wouldn't want to replicate that. So you've got to just roll down the strikes. So I would go out now, and I typically will give you guys something that would have a capital allocation of 2,000. So this gets you, your initial requirement is 1,800, so you could put on a 7x7. So let's look at the specs here. So with a 7x7, so what we're doing, we've got the December puts. So we're selling, per the $2,000 cap of capital allocation, it gets me to a 7x7. But you don't have to do a 7, right? You do a 1x1 or a 5x5 or a 10x10 or a 200x200, depending on your account size. But sitting right here at the -7 of the December. So looking at the two, we know that the December is going to expire in 50 days, January 78. So this is going to decay faster. That's why, even though we're bearish the market, we want to sell the near term, because we want to take advantage of the fact that that option is going to lose value faster. This becomes the hedge. So this is biased to the short side. So the delta is -16. But here's the big kicker, the theta. Remember, theta is time decay. Just use T for time. It's picking up 2305 per day to hold this in a 7x7. So what does the profile look like? All right, so here's the let's see, so you guys can see it. So here we're short 7 December 299 puts. We're long 7 January 299 puts. So that gives us a delta bias. Our target here in the SPYs is 305. That would be the 38% retracement. Now I've done this over the next 30 days. So in the next 30 days, if indeed, right, so remember the option model, you have to give it your estimate of what you're anticipating, both in terms of price as well as volatility. So my anticipation is that we see a 5% or greater increase in the implied volatility because of all of the confusion around the election. What does the market abhor? Uncertainty. What's more uncertain than who's going to be the president for the next 4 years? Big bump in volatility. Now again, I could be wrong. The only way I'm wrong is if there's such a blowout on Tuesday night that it's beyond the point of being contested. I think that's about a 1% probability. Again, I think it's 99% that we're going to the courts. So that said, I want to target a lower price and an increase in volatility. So here's the price sitting right here. If we, in the next 30 days, have a 5% increase in volatility and we head to 305, well, you know, I mean, this is... That's your max. So potential potential return here is over 2,000 on the 2,000 that you put up. Now, if you don't want to wait that long, right? Or if it just gets too crazy, well, possibility here. I mean, you do have a fairly good range here of profitability as long as the volatility stays high, right? So I'm making assumptions about volatility, which is expanding the range here of profitability. So you're, per the increase in volatility, you've got up to 352 here on the upside, with the market sitting right now at 324. So you got another 25 points of cushion on the upside, and on the downside, where you get in trouble, we'd have to fall almost 100 SPY points to get you in trouble down here, with plenty of time to get out and take profit at some of these other levels. Sweet spot, if you can get that this in 30 days, well, you'd pick up $2 grand on this. But you don't want to target, you know, what's the best case scenario. Certainly, you could hold this for longer, right? The December options, right? The January options have 78 days. These have 50 days. So you don't have to take these to expiration. In fact, very, very rarely do you want to do that. That's why I'm taking this out 30 days, end of November. How do we look end of November? Where's the market? What's the vol look like? Right. So if you want to just take the shorter term push, well, that's T plus 2 weeks. Pardon me, that's T plus 8 days. That'll be end of next week. You could pick up a quick 750, 800 there. Okay, there you go. So that's how I would put this together. I would do a 7. I'm already in the other one, so I'm not going to add here. I'm probably just going to trade it more in the futures market. But I think this trade is very reasonable. It's not hard to understand. You might, there might be a little. You might have to give a little bit more in terms of getting this filled on a 7x7. So there might be a little, there might be a little slop upon what you can get that filled for, particularly since the market is selling off pretty. How are we doing here? Well, we're starting to come back at the end of the day. So that makes this trade all the better since we're rallying a little bit here. So if you'll be putting this on Monday, likely. All right, so that's something to look for. If you can get this filled for under $2,000, I think you're fine here. But if that's too much size for you, I mean, like I said, you've got a very fat range of profitability here. But if you're uncomfortable with the size, or you can't get it filled right at the right price, maybe take it down to a 5x5 or a 3x3. All right, guys, so there you go. It's a good looking trade. All of the ingredients are working for you there. All right, guys, that'll do it for today. Have a good weekend. Should be interesting next week. We'll see you then.